What's up everybody, this is Jack from Crypto49er, bringing you my knowledge in cryptocurrency. Today I want to talk about the RSI Bull Bear ADX strategy on TradingView. So last week I showed you guys how to write strategies on TradingView. So if you guys missed that video, you should watch it just to understand how some of the terminology and some of how the Pine script functions and how they work. For people that are not familiar with the RSI Bull Bear ADX strategy, it got really famous on the Gekko forums because back in the day, I think this is Tommy Hansen, the guy that wrote up the strategy. He posted up this screenshot showing you that a backtest of ETH/USDT trade pair would make a simulated profit of 83 million%. That's what got people so fanatic about the strategy, and it's so awesome and people are going crazy over it, right? But a forum member, Jason BTC, recently pointed out that this strategy doesn't work anymore. It basically doesn't produce good results. I mean, he just said it and I'm like, is it really that bad? I had to backtest for myself and I did. And this is the results. Surprisingly, I mean, it's not exactly the same time frame, but it's just because I only get so much backtest data for USD and Ethereum trade pair. A 2-year backtest from 2016 to now, the market would have earned, if you bought and hold, basically if you bought it at $12.05 at 2016, you would have made 1,415% if you just held it, because as of September 13th, the price has gone up a little bit, so the price is back above 200. The end price at that point at September 13th was 189. But if you use this strategy and let it trade, you will end up only making 56%. So that is really bad, I have to say. So I tested using the exact same parameters as Tommy Hansen has listed in here, and that's the exact result that I got. So that was pretty disappointing. But all of this was kind of before I actually roll up this strategy on TradingView. So I'm going to show you guys what I seen from this strategy on TradingView, and I'll actually explain to you how this strategy works on TradingView. Essentially, this strategy has two trend lines, right? At the minimum, you can see it right here. So it has the green line is the fast SMA and the orange line is the slow SMA. And the idea is when the green line is above the orange line, this strategy will use RSI in a certain way. And then when the green line is below the orange line, it'll use RSI in another way. And the ADX portion of it is when the ADX, as you see here, it is below a certain level. In this case, it's below 20. That means there's not a trend. And then what this strategy does is it will modify the RSI settings slightly so that it will actually react to the market faster. That's my understanding of what Tommy Hansen wrote in the forums. And the same thing, if it's if the ADX is at a very high point, it will also modify the RSI settings to react to the market faster. So that's what basically this strategy does. So, and then as you can see here, it has a bull buy right here. So it bought in the bull market, it bought in the bull trend because when the green line is above the orange line, it's considered as a bull trend because the price point is actually higher than the slower moving average, which in this case I have set to 310 days. And then if I zoom in for you guys here, so you can see that over here, it has a bear buy. It bought during the bear trend because again, you can see the green line was below the orange line. The fast SMA is slower than the slow SMA. And then you see the sell position is a closed position order. So it's pretty much straightforward in terms of when it buys and when it sells. And it tells you based on the indicator here, whether it's buying in the bull trend or the bear trend. So as I mentioned before, during the bull trend, it uses a set of RSIs, and then during the bear trend, it uses another set of RSI. So you could technically have two sets of RSI over here. So you would, instead of having the ADX over here, you have RSI 1 here and RSI 2 here. But the problem with that is TradingView, if you have a free account, again, this is running from a free account, you can only put in 3 indicators. So I already have one for the strategy. The strategy itself is considered as an indicator. Volume is considered a free indicator, so it's included. But ADX and RSI is a separate indicator. So right now I have 3 indicators max. I can't put more than 3. So what I ended up doing was making a indicator called dual RSI, which actually lists 2 RSIs in the same area. so that you can see both. So right now I have the red line. The red line is actually a faster or lower period indicator. So compared to the pink line, which is a higher period indicator. And I'm just going to open the settings so you can see. So under settings in here, you'll see that period 1 is a 26 candle indicator. So that's a pink one. And then the red one is 13 period indicator. And you can always go to the style and change it to whatever color you want. So I'll probably put this up on, publish it as an indicator on TradingView so you guys can use it as well. So during the bull trend, we're using the slower RSI, and during the bear trend, we're using the faster RSI. And I can open up the format to show you guys again here. So you see the fast SMA is 10, the slow SMA is 310, the bull RSI period is 26, which matches the one over here, and then the bear RSI period is 13, again matches another one over here. So we have 26 and 13. And then you can see that there are other fields as well, like date range. So you can consider the date range of what it actually is backtesting on, and also the ADX, so on and so forth. So there's a lot of different fields that you can modify in this strategy. So anyway, let's go into the code and show you guys what this strategy looks like. I can open up the Pine editor and show you guys what it looks like, but it's easier if I just open up Visual Studio Code and show you in a much bigger screen, showing you exactly what the strategy does. So again, in the strategy section, it has RSI Bull Bear ADX overlay equal true, meaning that it's going to overlay the SMAs on top of the price chart. Pyramiding equals 0. It means this basically we're following Gekko, right? Because Gekko right now doesn't let you layer in trade. So you can't like say, I'll buy at price A and then buy more at price B and then buy more again at price C. You can't do that. It's all or nothing. So that's why pyramiding is not allowed in Gekko, and then we're setting it at 0. So initial capital we're setting to 1,000, and then all these input settings. So again, this is what you saw in the format section. So under settings, going back to here, if you click on format, you'll see the different settings. So this is what lets you modify those settings. By putting all these variables in and putting input in front of it, you'll be able to modify these settings. These numbers are the defaults. So after that, you can change it to whatever you want in the strategy itself. This section here is the true range. This is the entire ADX indicator. As I've shown you in my previous video, I haven't figured out a way to call the ADX indicator separately. So I just basically copy the whole entire indicator in here, and I'll be able to reference the ADX if I need to. And then the next part is the backtest portion. This will let you determine the date range that you want to backtest. So from that point on, this is where the RSI Bull Bear strategy is. This is where the strategy really does the buy and sell. So first thing it checks is if the fast SMA is greater than the slow SMA, it means that we're in a bull trend. It will enter a position, a bull position as I call it, and the long position is true. And then the next thing is how much cryptocurrency you're going to buy. What it's going to do is going to use the entire initial capital divided by the price so that you can buy the maximum amount. That's exactly what Gekko does. On the when, it's basically a buy when the bull low is greater than the bull RSI and window. The bull low is 50 by default, but it could be modified by the ADX. So depending on whether or not it's modified, it might be a little bit different. But if the bull low is greater than the bull RSI and it's within the window time frame that we're backtesting, then it will create a long position. And then on the comment section, basically it said bull buy. This is what you see on the actual strategy on the chart. Similarly, it will close out all positions because again, Gekko is an all or nothing trading bot. So when it exits out completely. It doesn't exit out partially. So what we're using is strategy.close all, and it will just exit out completely. And when it does it is when the bull high is less than bull RSI. So I think the bull high is 80. So if the bull high is 80, but then the bull RSI is greater than 80, that's when it sells. And it also has to do this within the time frame that we specified. And it'll do exactly the same thing in the bear trend, except that the only difference is it will do it when the slow SMA is below the fast SMA. These four lines really control the strategy on when to buy, when to sell. Very simple. So, and after that, I just plot out the fast SMA and the slow SMA so they could see it on the chart. And that's all there is to the strategy. Really comes down to it's about 20 lines of code to create this strategy on TradingView. Let's go back to the strategy and show you guys what it looks like. These settings I do not recommend you use, obviously, in terms of actually trading and making money, because not financial advice. These strategies are just to show you that what you can manipulate and change. So, but I was playing with the settings just to see if I can make the strategy profitable. And even though this strategy is basically not profitable during a bear trend, as you can see before when I was backtesting, it only made 56%. When if you just held it, you would have made so much more. Essentially, what this means again is that during the bull trend, you're making a ton of money, but then during bear trend, you're losing a ton of money to the point where you're barely up on the market. Basically, you're still up, but then you're up so little that buying and holding would have made a lot more sense. But going back to TradingView, the one big major issue I have to say about TradingView is that they have a limit of 5,000 candles for free accounts. So meaning on a 5-minute time frame, you are getting a little over 3 weeks in terms of what you can see and what it can actually trade on. So I open up the strategy tester, I'll show you that this is making 9.36% profit and it has 60% profitability. But the problem is it only traded from the first trade was September 17. So all you can really test in TradingView, it is a 3-week time frame. If you have a paid account on TradingView, you get 10,000 candles. So roughly you get 6 weeks of a time frame. So compared to Gekko, which gets you backtest the whole entire 2-year or however long you want to. Yes, you can't do that on TradingView, but it gives you a very quick idea at least on what the strategy looks like and how things work and if it's even profitable. So right now, based on the strategy I have set up right here, it is profitable. So it's still 9.3% profitable. So does it beat the market? You can go to performance summary and take a look. So the market, the buy and hold return, meaning that if you bought at the first trade level right here at September 17 and actually held it from September 17 on, you would only have made 1.88% compared to using this strategy and actually having a trade, assuming that it's able to hit every price point that it wants to, because that's basically what backtesting is. It's just guaranteed that you'll fill the order compared to live trading, which doesn't happen at all really. But assuming that you end up getting a 9.36% profit. Because I know with Gekko, you're putting in limit trading, so you can actually change it so that you can say there's commission of 0.3%, at least for Coinbase. Depending on the exchange you use, you can change Gekko to use market orders instead of limit orders. And so let's say you're using market orders for all your trades, pretty much guaranteeing your price point. So let's see how much you make from here. So if that was the case, you end up losing money still. So that just shows you that it's very tricky to trade in the 5-minute time frame. That's one of the reasons why in the forum anyway, I mentioned changing to a higher time frame, because if you're trading at the 5-minute level, it's really cool to see it working and making so many trades. Like in here, it's 28 trades in a matter of 3 weeks. But you end up losing money because most of the time, and I've seen it in the past, those 5-minute candles, you're just passing them right by because Gekko puts in the order, it doesn't get filled. 5 minutes later, it still doesn't get filled. 10 minutes later, it doesn't get filled. Putting in market orders makes more sense, but as you can see here, it doesn't make sense because the market orders will kill your profit to a point where you actually will end up losing money on your trades. But let's just say theoretically, you are not getting charged any commission whatsoever, and you are back to a 9.36% profit level. You can still see why the strategy doesn't work that well sometimes, and I'm just going to go scroll through it, see if I can find what I'm going to try to point out to you guys. Actually, here's a good example right over here. As you can see, it bought in during the bull trend at 68 RSI, pretty much that's when it peaked out. It never hit 70, so it hit around 68 RSI for the longer period RSI that it uses for the bull trend. After that though, that's when it starts falling, right? But that's when it actually bought. This is where it doesn't quite make sense for the strategy. This strategy doesn't care where the RSI is coming from. It could be coming up or down. If it's coming from down, you're usually making money because what it means is you're buying in at 50 and probably selling at 80. But what happened is in here, you're buying in after it's coming down instead of coming up. As you see here, you're buying it at a pretty high point and end up selling it at a pretty low point, which end up being a loss. In this case, you're buying around 229.60 and then you're selling it at 225. So it's a loss right here. So how do you avoid these things? Like how do you modify the strategy to make this work better? So one way to do that is using the volume. So I'm gonna delete the strategy and just gonna show you how it looks right here. So you see how like on the bottom right here, you see the volume. So the volume actually tells you how much volume is happening for that candle. A lot of day traders will actually use the volume to justify whether or not it's a good time to buy in or not. Here's a good example right here though. So there was a lot of downward movement, and then up in here, all of a sudden you have this nice little spike. So it shows you that, okay, this is a good time to buy, because you know at this point, the green candle, the green volume here shows you that there's 1,828K of volume here. That's pretty good compared to some of these other candles here having like less than 35 in terms of volume, which is like basically no activity going on in here. So, but this shows you that it has a huge turnaround, and people that relies on volume will end up buying it over here and hopefully sell over here just to make a profit. We can modify the RSI Bull Bear ADX strategy to use the volume as well. So, and that's what I did here. And essentially, this is exactly the same strategy, but it's making a little bit less profit right now, you can see, but also the max drawdown is a lot less. So let's go to performance summary here. So you see that the gross loss is 1.73%. Just gonna close this strategy and show you again on the regular RSI Bull Bear ADX strategy in terms of the gross loss. So again, 1.73 for the one with volume, and the one without volume, it has a 7.83% gross loss. So you see that it's actually much more riskier with the strategy that doesn't use volume as an indicator. The one with volume plays a lot safer because it knows only to enter into a certain position when there is a high volume. I'm gonna show you guys in code-wise how that strategy works. All I had to do was change in here and volume greater than vol. So basically I went back up here, I added a variable called vol, and I added it has to have 1,000 in terms of volume. So that's the default right now. It's set. So what it means is if the volume is greater than 1,000, and I said another thing where the close has to be greater than open, this amount of volume has to be a positive volume. So it has to be a green candle. If it's a red candle, I wouldn't want to buy into a red candle. That means it's still falling. If it's a green candle with a high amount of volume, that's when I wanted to buy in. So that's all I really did. Just modifying when to buy and by adding the volume and the green candle, that's all I changed, and that's all you're able to see from here right off the bat, the difference. Again, it's performing slightly worse because it's only earning 8.8% instead of 9%, but the risk it takes in is a lot less. So I haven't even tried this, but let's say that if I add back the commission that I added before, is this still a positive trade? We'll find out right here. So you see, that is a difference though, right here. Net profit, 4.3%. So it's still a profitable strategy. If you don't use the volume and you're using market orders, you're going to end up losing money because you're entering into a lot more positions, and you end up entering positions that makes minimal gains, and those minimal gains will all be wiped out by the trading fees. So that's why by using the volume, you're only entering trades that are a lot safer, and those trades are the ones that indicate that there is positive movement that actually will push the price point higher. So the bottom line is this: the RSI Bull Bear ADX strategy works extremely well during bull markets, at least in backtests, but performs horribly using the same settings for bear markets. Using TradingView to visualize the trades that the strategy makes helps you understand what the strategy is doing and can help you make better adjustments than brute force automated backtesting. Again, there's 15 variables in the RSI Bull Bear ADX strategy. So there's hundreds of millions of combinations. Just by seeing it on TradingView, you can easily see that you don't have to modify everything. There are a few variables that make a lot of difference, and there are a few of them that makes not much difference at all. And you just playing around on TradingView will really help you understand that. So modifying the strategy is also easy on TradingView and can give you an idea on what works and what doesn't. So that's my video for today, guys. Let me know what you guys think. Leave a comment down below. Like and subscribe. If it isn't crypto, it isn't worth mining, it isn't worth speculating. Peace out.